Good day traders, welcome back at my YouTube channel. It's been a while, I think for about 5 or 6 months I haven't uploaded a video on YouTube, and I think it's time for something new. I recently brought out the Orderflow Trading Advanced Masterclass course. This video is also contributed to that course and contributed to US30 that I start to trade more and more in combination with gold. I really do enjoy trading US30 because of the price ranges. Within this video I'm gonna give you a little bit more deeper insight, more in-depth price reading of US30 and how I look through US30. We all know US30 is a great mover. We have usually ranges from 300, 400, 500 pips easily during the New York session or the London-New York overlap. It's definitely a New York mover because it's your US30, you know. I do like trading this asset. Okay, US30 order flow trading. Let's go to the first page that I created for you. Identifying and understanding what price range you're trading in terms of buyers and sellers. In front of you, you're looking to a 3-day daily chart. I have highlighted the most recent and most important levels for me on US30. So you can see 4 lines which represent the most important highs and lows from that 3-day cycle. Okay, in front of you, you can see that US30 is moving away hardly from this level. So that means there is a lot of buying and selling pressure. There's really something happening within this price levels. 4 lines representing the lows and the highs. Right here on this most recently low, you can see that price tapped at this level, rejected this level and pushed it away for a lot of pips, almost 1,000 pips. Right here we see the same scenario happening. Okay, really beautiful. Right here we have almost an untouched level. We do have a supply zone up front right here. If you will map out this level right here, you have a valid supply level. So that was the first time back, new high created. And you can see that the price is moving nicely within between these levels. So there's a lot of buying and selling pressure, and you see hard momentums, hard shifts from this level. Okay, so that's the most important thing for me. Identifying the price range you're trading in to get your bias okay, and then moving to the lower time frames to get your continuation liquidity zones in place. Okay, next page. In front of you, you see from last week the lows we tapped, and you can see that there was something happening within those lows. Okay, you can see there is a nice demand level created right here, and we have a lower time frame demand level right here. You can see we pinpointed this level, and you see a change of structure. So you're seeing sellers to buyers right now. Beautiful example. So this is definitely a liquid zone, liquidity zone. Okay, nice fresh imbalance level, proper leg out to the upside, first time back. And if you're moving to the next page, you can see a great example of a first return back on the lower time frames, minute 10 time frame. First return back to this demand level, full of potential buy orders. And that's also what we saw right here within that low. Confirmation of a liquidity zone, a demand level, first time back trading to this level. So short orders dive into this level, pinpointed within this level, and after that we see a deep liquidity spike in 3300 level, which is a round number, which is an institutional number, pinpointed in this high. And at the moment we pinpointed this level, you can see that the price is moving away pretty hard and accurate, pretty hard, for almost 400 pips. So this is where the real magic is happening within these levels. If you combine those higher time frame lows and highs, and you can identify the proper supply and demand areas, the liquidity zones, you have an iron strategy. You definitely have. And right here we see a continuation up into those highs. in the next picture, I zoom it a little bit in for you. You can see that grab of liquidity. Many retail traders more than likely have short this market right here within this big candle because they thought, yeah, this is a trend change, or this is now we have that sellers, or whatever they thought were more than likely a resistance level right here. Nice potential short, but do not short the bottom. Understand where the liquidity is in the markets. It is super important. Otherwise, you will become the sea of stop losses. Okay, the sea of stop losses, because after we hit this level, we see a major rally to the upside. Okay, major rally to the upside, because all the big whale orders were waiting to get filled right here, and we run into the next high to fill all that buy orders, institutional buy orders, institutional order flow. Next one, a nice similar scenario for next week on US30. This is all based off supply and demand combined with institutional order flow. We have a lot of room to the upside for upcoming week. Fresh demand levels created. So for next week, for example, the examples that I gave you a few pictures back, that you can see that the price is running into the demand levels, and after that reject, grab all that liquidity, grab all that buy orders, and we see a continuation up. For next week, I think we will see more than likely the same. I'm mapping out two important levels for me for upcoming week, and I would like to see how price respond to these levels. Almost 300-400 pips up. On the higher time frame, you will find out that we have a supply level, a new high where we more than likely gonna run into. But US30 moves in waves. Any asset moves in waves. Okay, so in the end, it's all the same thing, but with a different behavior. Okay, the ranges on US30 and gold, for example, are way bigger than, for example, GBP USD or Euro USD. You know, you got my point. So that is the big thing why I do like enjoying US30 gold, because the ranges are great. Yeah, I'm traveling a lot, so being in a lot of different time zones. So London, New York overlap / New York session is my session, you know, and yeah, US30 is definitely a New York mover, so that suits me the best, and I don't feel the need to spend 10 or 12 hours in front of charts. I just want to plan the trade and trade the plan, mapping out my levels and see where we can take for putting alerts. Also did a video about it, I think 6-7 months ago, so definitely watch that too. But putting my alerts within these fresh levels, and when an alert goes off, I can monitor the chart. You know, I can monitor the chart, what's happening within my supply and demand level, and I will pick my elements for that later. About it more in this video. The order flow elements, and I will see how the footprint charts will react, how we can see that buying, selling orders within our supply and demand levels will be created. We will see how the delta will develop, but more about it later. Yeah, more than likely we're going to see more long orders for next week if we're returning back to this level. Okay, so we will see. Right here on the hourly chart, you can even see the levels more clear. Okay, like I said, imbalance to imbalance. Trade what you see, not what you think, and prepare for every possible scenario. So that means be flexible, adapt to change, but understand the price range you are trading in. That is the big message of this video. Pretty nice imbalance level, pretty nice imbalance level. Let's see how price will respond to this level. The elements, with the elements I mean the order flow tools. Okay, the order flow tools are, I named 4 of them. The footprint chart, which gives you a deeper insight of what's really happening within our levels of supply and demand. You can see that stacking orders incoming from minute to minute, from 5 minute to 5 minute, from minute 15 to minute 15. You can really see what's really happening within this market. So it gives you even a higher chance of winning. Okay, trading is not only winning because we win, we lose, but it gives you a higher chance of success, and it will definitely increase your skill set, your win rate. So beautiful thing. The delta, we have the delta, we have the volume, how much volume is tanking in, you know. So we have the market profile, the POC, point of control, which is also a pretty nice thing. Market profile, POC, point of control. It's a beautiful tool to see where is the real control in the market at that current day or that current week. You can see the red lines with right here, the POC, point of control. So you can see, for example, for next week, this is a new chart on US30, that the point of control relays right here. Okay, so there is more than likely there's a lot of interest in buying from these levels from the institutions, okay, from the big boys. That is what the point of control shows you. It's also matching up with our supply and demand levels most of the time. Point of control is a great tool to give an extra confluence within your trading, you know. In front of you, the second great tool of order flow trading, the footprint chart. The footprint chart gives you a deep insight of the institutional order flow. So you can see all the numbers in front of you. The green boxes right here is the volume. The blue boxes is the delta. Okay, I explain this in detail in the course. The footprint chart right here, you see a lot of numbers, and you see that little black boxes in each candle. Okay, this is the cut, the commitment of traders. So the highest points of this certain cluster. Okay, you can see if you for example, you pick this one right here, you can see there are a lot of numbers within this level, and if you go into the cut, commitment of traders, you can see that the buyers won this rally right here. Higher number. So if you scale down to the lower time frames, you get a little bit more in-depth view of this. This is just an example, but right here you can also see it, 543, which is a higher number than 512. So there is more buyers than sellers right here. The buyers and the sellers are constantly fighting within each other, you know. So it's definitely a nice tool. It's too much to explain within this video, but it's just an example. Okay, footprint chart, commitment of traders cut, beautiful tool. Then we have the delta and the volume. The delta and the volume. The volume is a really nice and extra confluence if you combine this with the point of control as well, and with in your supply and demand levels. Most of the time the volume will show you an increase of volume, for example, if we are reaching out to a supply and demand area, and that could be a scenario for a potential continuation or a reversal. Same stuff with the delta. It gives you an extra confluence, you know. It's a nice element to use in your trading and can be very, very, very powerful. So like I said, the delta, learn all about the different deltas and how to apply it within your trading. You have a few different deltas. You have the cumulative delta, you have the standard delta. It depends. Myself, I'm not using all the tools. It's just a little arsenal I use. And there's especially the footprint and the POC and the volume in the markets, because I want to see where the real orders are getting in, you know, and I want to trade with the wheels, not against them. That's the most important thing. Footprint, market profile, and the future volume, and much more. There are a few other tools like the VVamp and all that stuff. Not using that as much because, you know, supply and demand for me is everything, but this gives you just the extra tools that most of the people need. So if you are still struggling with entries, but you have a good understanding of supply and demand, I can recommend the order flow tools to use in your charts. It's not a holy grail or anything like that, but it just can give you that extra confluence, you know. So yeah, my community is really happy with it, so I'm happy about it as well. You know, I'm really happy about it. This was the short video of US30. I hope you all enjoy it. Don't forget to hit the subscribe button, like it, leave me a comment or anything nice. Unlearn to learn, and on to the next video. Wish you all a lovely trading week. Keep in touch. Much love. Peace.